how infinite banking can save your donkey. There are a number of scenarios where applying the infinite banking tax-free cash growth warehouse strategy can literally save your donkey and give you relief and peace of mind. So hold on to your hats. This is going to be exciting. Aloha. I'm Stan Cox, principal broker and strategist with SC Finance Strategies and Insurance Consultants. I'm also the author of the books on the tax-free cash growth warehouse strategy, and I'm the managing director of the Hawaii Financial Freethinkers Academy, a nonprofit financial literacy education organization. For the past several years, I've focused on and specialized in the infinite banking concept and developing the tax-free cash growth warehouse finance strategy. So if you find this to be helpful, please like this video and subscribe to this channel and share it with your family and friends. Also, please post your questions and comments here. I'm going to share a couple of real life examples here. Here's the first one, and one that many folks can identify with. If you, well, not you, but someone were to irresponsibly overuse their credit cards and rack up a mountain of debt, or if out of temporary need, credit was leaned on heavily for a time with the same result, it can be overwhelming. And in the last few years, we've seen the banks and credit card companies increase their interest rates dramatically, and inflation has been running rampant. The cost of living is constantly increasing, and if we just make the minimum payments on all our credit loans, it'll take the rest of our life or even longer to pay it down. Not happy thoughts. So what can we do? Infinite banking man to the rescue. Here's how infinite banking and the tax-free cash growth warehouse strategy can save your donkey. Let's say the credit debt is around $20,000, and while the interest rate used to be around 10 or 12%, it shot up to around 24% in the last couple of years. Man, that's a lot of interest to be paying. Even when that total debt is spread out over a few cards and loans, the total monthly payment is going to be around $575 a month. And at that rate, you'll end up paying something like $14,000 in interest alone. Now, if you have just $10,000 available in the cash value of your tax-free cash growth warehouse life insurance policy, you can take a policy loan and pay that $10,000 to the principal amount of the loan of the debt, and that'll lower your monthly payment on the credit debt to just $285 a month, about half of what you've been paying. And even if you just pay the minimum going forward, that alone will still save you $7,000 in interest. Yes, that $10,000 you leveraged of your cash value will be charged interest to, but that'll only be at about 5 or 6% simple interest. And at the same time, your cash value will be earning 6% compounding or more. So really, you can look at that leverage loan as being interest-free, since you're recapturing more than the interest charged. And you can hold off on making payments to the leverage loan and instead continue to pay the $575 or so per month on the credit loans and get them paid down in just over 2 years. Then work on paying down the leverage loan. Now, I know this works because I have a number of clients who are doing exactly this strategy as I've laid it out here. And my wife and I have paid off around $40,000 of car loans with the same strategy and saved around $10,000 in interest alone by doing this. Along with the extreme flexibility of the leverage loans with the repayment schedule, this brings a huge amount of relief and peace of mind. Okay, here's another mountain that can be leveled by applying the infinite banking tax-free cash growth warehouse strategy. Mortgages. We'll use a mortgage balance of $400,000 for this example, and that would make the monthly mortgage payment of close to $3,000 a month. That means that over 30 years, you would pay over $600,000 in interest on that $400,000 mortgage. That's over $1 million in total. Now, if you have $50,000 available to leverage in your tax-free cash growth warehouse, you could take a policy loan for that amount, pay it on the principal of that mortgage. That'd drop your mortgage payment down by about $500 a month. Or if you continued to pay the $3,000 a month payment, it would reduce the payoff date by 10 years. And here's the thing with this gigantic mortgage debt. As your cash value continues to grow in your tax-free cash growth warehouse, whenever you accumulate another $10,000 in there that you can leverage, you can take that additional leverage loan and chunk down that principal of that mortgage and further reduce the payoff date and the interest that you will have to pay. And remember, you're only required to pay the annual simple interest on that mortgage, on that leverage loans. So while you're transferring the mortgage debt to your insurance policy, the simple interest charged on those leverage loans is less than the dividend interest paid to your cash value. So you still come out ahead on that, while at the same time, you're reducing the amount of interest that you have to pay on the mortgage, and that's saving you a ton of money. Even without continuing to chunk down the principal and just paying the initial $50,000 on the principal, will save you over $300,000 in interest. So if you were to pay an extra $10,000 chunk off the principal once every 2 years, let's say, you could potentially save as much as $500,000 total on that mortgage. And you know, that's all interest. A number of my clients use a similar strategy with their real estate investments. And I know at least one client who used this strategy to save the family estate. At one point, the surviving parent and owner of the property thought it would be a good idea to take out a reverse mortgage on the property. And I'm sure that the income resulting from that move was a welcome relief. But when that surviving parent died, the children were left with just two options: either pay off the balance of the reverse mortgage or lose the property. Fortunately for the four surviving children, one of them had the wisdom and foresight to establish a tax-free cash growth warehouse into which they had transferred their retirement funds before they lost everything to the failing stock market. As a result, my client was able to pay off the reverse mortgage and save the family estate. One of the siblings who had been living in the house was able to continue living there, and the property continues to grow in value and continues to remain the family estate. Happy endings. These are just a few examples of how applying infinite banking tax-free cash growth warehouse strategy can literally save your donkey and live happily ever after. So if you found this to be helpful, please like this video and subscribe to this channel and share it with your family and friends. Also, please post your questions and comments here. You have questions, we have answers. For a more complete explanation of the tax-free cash growth warehouse strategy, you can watch our free 60-minute webinar. The link is in the description box below. The link to buy my books on Amazon.com is also below. If you'd like to book a free phone consultation with me, the link to my Calendly page is also below. And if you'd like to apply to become a client of ours, The link to the application is also below. We're here to help, and we look forward to helping you. Aloha and mahalo for watching.